Good morning. Good morning. Today we're going to talk with Carole Sue Fiedler, who is from Innovative Settlements. Innovative Settlements?
Innovative Settlements.
Yeah, I'm so excited. Another tool in our tool belt, in our SRES tool belt. All righty.
Shall I?
Go ahead.
Okay. Well, hello, everybody. Thank you so much for being here and your interest. I would love to introduce you to something called life insurance settlements. And in a nutshell, what that means is taking an in-force life insurance policy that somebody already owns and then reselling it on the secondary market. It's no different than selling any other piece of personal property. And may I just say, if there are any questions, just please raise your hand. And also feel free to make a note of anything you might want to go back to, because there's so much information. I've tried to really pare it down just to the top level so I can give you an overview that makes sense. And I'm always happy to go into detail and detail and detail because there is so much. There are a lot of players in this. It's very complex. And there's a tremendous amount of misunderstanding and confusion. So that's where we're starting. Okay. A life insurance settlement, as I said, is the sale of a life insurance policy. Now, just so you know, it's completely legal. In 1911, there was a decision about this, and that's what it's called, the Griggs decision. And that was what deemed life insurance policies are personal property, who the owner can do what they choose to with. They can trade it for a house, for example, if they wanted to, although I wouldn't recommend that without deep research, but anything is possible. The way this all started, and I do have all of the details of the history, which is kind of fun, but basically in the late 80s, early 90s, when AIDS was really taking over, unfortunately, many of the people that had AIDS, now I was just north of San Francisco at the time in Sausalito, but I was well connected to the gay community in San Francisco because of my best friend, David. David really enlightened me as to what was going on. And we found out that this is really true. The doctors would say to their patients, you have AIDS, you have 6 months to live, quit your job and go have fun. That is the honest to goodness truth. I heard it myself from quite a few people. So what happened was, as a result of this and these guys needing money, companies with money started to crop up and offer them money in exchange for their life policies, which often they had from their employers. They would give them money now, discounted from the face, and the guys would get the money, no strings attached. At the same time, the people that gave them the money, which was then called funders, they would take ownership of the policy. They would continue paying all the premiums. It's now their responsibility. And eventually, when the individual insured died, these investors would get the full death benefit. Very simple transaction on the surface. In 1996, August of that year, that's when protease inhibitors were introduced. Protease inhibitors are the medications that first worked against this AIDS virus. People started living longer. It was the most extraordinary, wonderful thing ever, but the investors were not so happy. They needed to work or pay those premiums much longer to get their money back. Not a good thing for them. I was thrilled, but not good for them. We as an industry started looking at what was really going on. And would you believe we found out that 9 out of 10 life insurance policies don't get paid off by the life insurance companies. 90% of them were just let go. People let them lapse. Or if a term policy, they did not renew the term. Policies would get too expensive. Their needs would change. The kids are growing up. They're going off to college. They're making a fortune. Look at the kids in Silicon Valley. They're making a fortune themselves. Parents decided, we don't need this life insurance policy. Let's just let it go. Enter what we now call life settlements. We took the same concept, and rather than offering them a lot of money because they were dying, we were able to take the same process and just offer them a little less money, but always more than they would have gotten. If they have a cash value, they'll get more than that. Obviously, for those 9 out of 10, which is now 8 out of 10, it's something rather than nothing. So we came in, again, doing the same thing, but called life settlements. It was a rocky road for the first few years while we were figuring out, but now it's a legitimate multi-billion-dollar international business. Investors have come on board, and not just individual investors like we started. Now it's conglomerates, it's banks, it's big institutions and funds who purchase policies, again, at a discount, and then pay the premiums and wait for those policies to pay off. It's a much bigger industry now because there are so many policies that are lapsing. In fact, I do have some statistics. If I just hold this up, Julie, are you able to maybe take a picture of it and some?
Yeah, no, go ahead. Well, we're recording, so it'll be good.
Okay, good. Here are some statistics that I found. There's an industry association where many participants are part of it. See if you can.
Well, you have to take your blur off.
Good. Okay. Like I might be able to
But
figure
just
this
try
out.
holding it up and see if it'll focus on its own.
I think I'm gonna try to email it.
Yeah, and
If I may read it, in
I'll-
total, you're gonna love this, 789,603,246 in dollars was paid to consumers from life settlements. $789 million. That's a lot of money. $4.35 billion in total face was purchased just last year. Just last year. Over 3,000 completed life settlements. So there really aren't that many. And that is because we still have this challenge of getting people to know about it. Why is it so challenging? At the beginning, the insurance industry was against us. Wonder why? We were changing their numbers. So some of these insurance companies actually forbade their agents from telling the clients. People with the insurance had no idea. This went on for years and years and years. Then the California Department of Insurance, well, let me backtrack. A company came into the business called Viaticus. They were the first company to buy policies that were backed by an insurance agency, an insurance company, CNA Insurance. They saw the value that the insurance that we were doing, and either they were going to get involved and play in it or stop it altogether. They decided to get involved and play. Viaticus had big bucks. They started promoting regulations that would allow life insurance agents to do what I do, to do viatical settlements then, and now life settlements. And let me say, a viatical settlement and life settlement is pretty identical in process, except that viatical settlement is for terminally ill only. If anybody has more than 24 months to live, it becomes a life settlement. Okay, but assume for this conversation it's basically the same concept. We're taking a policy, we're selling it at a discount, the insured gets the money, no strings attached.
So how do they determine if it's a terminal illness or whatever? Do they need a doctor statement or?
No, what I do, good question, and please keep them coming. When somebody applies to me, and this is for whether they want me to broker it or not, because that to me is at the end of the conversation. The first thing I want to do is help them evaluate their policy and see if it's even possible to do anything with it. Then, assuming the policy is one that might be sold, then I need to start asking about health. I want to know their age and their health. I can typically make a judgment call on that first conversation if it's worth trying or not, and if it's going to be a viatical or a life settlement. So if we all decide to proceed, then I will collect medical records. So nobody gets to just say, yeah, I'm dying, give me my money. It does not, although I literally have a client right now that's been trying to do that. And she's a federal judge and she's making me crazy, but I adore her.
So how can you collect these records with the HIPAA laws? I mean,
I have them sign a HIPAA. There is a HIPAA that is part of my application, a medical HIPAA.
okay.
So when I do get the records, I contact the doctor's office. I explain what I'm doing, that I am not an insurance company. I'm not another doctor. I'm helping this person get some money. I may or may not say it's from their life insurance policy, but I am an advocate for those people. So then when the medical records come in, they get sent to a longevity company. Now, these are companies that are in place just to evaluate medical records for our industry. So not only are they working with the records themselves, but they have all the statistics that they need. They have the background, they're hip to the latest and greatest treatments. So this is a great overview for the providers. Now the providers are the ones that buy the policies. And even the terminology has changed. They used to be funders. They're not funders now, they're providers. These companies get the money from the investors, or they have their own, and they have a specialized license just to purchase policies. Now, this varies state to state. So for this exercise, we're dealing with California only. I do have licenses in various states, but that also has changed over the years. But in California, we're all solid. I'm sure you all are licensed in what you do. And as long as you're working with a resident of California and the home is in California, no problem there. If the home should be, let's say, if there is a life insurance policy in this picture, but the policy is owned perhaps by the couple's child who lives in Arizona, that's something to discuss at the time, and we figure out the best way to do it. Anytime there's a state that I personally don't have a license in, I already have an affiliation with another licensed person in most states. So that works very easily. But you want to know, and the Department of Insurance also has a list of all of these companies. They no longer keep a list of brokers because the insurance companies, getting back to this regulatory issue, the insurance companies and this company Viaticus with the money that buys policies, they wanted agents, insurance agents, to be able to do life settlements. They didn't want any training. they nothing. By virtue of being an insurance agent for 1 year, you could now represent somebody and sell their policy. This was not a good thing at all, because I believe insurance agents are commission driven. The insurance companies teach them to sell as much as you can, and that's where your commissions are going to come from. But I've always held that a life or a viatical settlement needs to be compassion driven, not commission driven. I'm not looking at my own pocket. I'm looking at what's going to be best for these individuals. How can I get them the most money? And then my fee comes after the fact. That's not how life insurance agents work. So I literally went to, where are we? Not Albany, Sacramento, and fought this regulation several times. The first 2 times I fought it, I won. And I was the only one fighting it for the consumers. The 3rd time it came up, I wasn't able to fight it, and it went through. That led to several rounds of major international fraud, all perpetrated by the life insurance agents. So I remember saying to somebody at the department, I rest my case. You know, what can I tell you? So one thing we need to get into in depth a little bit later is fraud and how to spot it, how to avoid it. Because these people that are looking to make money and using this as a vehicle, they're smart, they're clever, and they go after the vulnerable. So it's not something anybody's looking for. To me, another thing to look out for from the consumer point of view is, all right, I'll give you an example. There are a couple companies advertising on television right now. These companies are providers. That means they buy direct. So if a person takes their life insurance policy and goes to one of those companies directly, they don't know what the competition might pay. They don't know if they're getting as much as they possibly can. And they really don't know if they're working with good guys or bad guys. That's why I do what I do. It's also how I first got involved in this. Back in the days of AIDS, companies started cropping up that bought policies. There were 4 of them, I believe, 3 on the East Coast, 1 here in San Francisco. And what I learned from my friend David, who was in that community, was that, hey, I heard somebody just sold like a $300,000 policy, but they only got $10,000. Why is that? I said, well, that should never be. Then we did a little bit of investigation, and we found out that one of those 4 companies was constantly lowballing people. And since people in general didn't understand that they could sell their policy, they certainly didn't know that there was a market, and we were just getting competitive market at that point. So I realized that they need an advocate. They need somebody between them and these providers to make it right. And because I started out as a real estate broker, it came naturally to me. So I would get all the information. Literally, I made it up as I went. I knew what the providers wanted, so I figured out how to get it. I get information from the insurance company. I got all these medical records. I created forms that were needed, that many of them are still used today, the basis of which are used today. And then I would take it all and I would put it out to in those days, the 4 companies. Soon enough, I went down to 3 because I had to prove for myself that that 4th one was indeed lowballing. I always got them to pay more, but still, they never came up to what the other guys paid. So I get offers from multiple companies, then I negotiate them to get the highest offer. It's no different than selling a home, a popular home, that you're getting multiple bids on. You're going to go for the highest bidder. If that particular bidder doesn't have the wherewithal to get the deal closed, maybe they don't have the money or their money is tied up or whatever it is, get rid of them. We work with the next batch. And that's exactly what I do. I personally, or any good broker, will submit the policy to a number of different brokers that are qualified, that are licensed, that we know have the money. In many cases, I have to also look at the time frame because this is a lengthy process. It could take 2 to 5 months for somebody to get their money. So if I'm dealing with somebody that has a personal issue and a time deadline, I have to consider that. Certainly, if I'm dealing somebody with a terminal illness or unhealthy in any way, that's something to consider. Another issue in the industry is transparency, that a lot of the information that comes naturally to me to share, that I'm literally sharing now, doesn't get shared by other people. Either they don't know it, they don't understand it, or they maybe choose not to. People are afraid, I shouldn't say it this way. Many people are afraid to lose their potential commission. And when you think of that, I believe that that clouds some of their judgment, or clouds, sways the information they provide. They may provide just enough to get the policy so they can sell it without explaining, well, hey, what if it takes 4 months? My federal judge, the one who's telling me she's dying, her medical records don't show it, by the way, but she has been talking to me literally for 8 years. 8 years. She tried it herself. I coached her, didn't work. But this is somebody that had just enough information to be dangerous. You don't want to do that, because she tried calling providers on her own. I don't know what she was thinking, but she said she wanted to just confirm everything I said. But she was finding out from them that they weren't willing to buy her policy. I don't think that's the case, but she needs that advocate. She needs somebody to say, look, this is why this is a good deal for you.
So Carole, how do you get paid? Who pays you to do that?
Excellent question. Most of the work I do these days is education and consulting like this. And I don't get paid at all. Lately, I've been hired as an expert witness for different lawsuits that are happening that came out of that fraud that I mentioned when insurance agents got involved. That's 20 years ago. It's coming back to haunt those people now. I am one of the few people left that lived through it, that actually understand what happened. So when I do that, I get paid. As far as brokering a policy, if it's decided that selling the policy is the best opportunity for them, and I take it, and with their approval, of course, and I take it and I broker it, I get paid by the company that buys the policy. So I negotiate the best possible deal. I discuss with my client. Once they accept the offer, we probably have another 3 weeks to go, but we do contracts and all this. We change ownership and beneficiary. Then they get their money. They still have 15 days to change their minds. if they have second thoughts, if they die, God, hopefully not, whatever it is, they can change their mind. Again, no questions asked. And it's called the right of rescission. It's built into the contract. And then we turn the whole process around. Okay, they get their policy back. The funders get their money back. I do not get paid. If, on the other hand, they don't change their mind, I get paid after those 15 days. Okay, now let's talk the stuff that most people will not talk, and that's how high are these commissions? The reality is that for the majority of years I've been doing this, there's no regulation whatsoever. And a lot of people that got into this, see, I do life settlements and only life settlements. So I look at it differently than others that I say dabble. They will take whatever they want. And the providers were allowing it, which is insane. So what has now happened industry-wide, this does not go for the life insurance agents to do it on their own, but industry-wide, we have come up with, this goes back to Viatical days, 6% of the face of the policy was deemed a reasonable commission for a broker because, and I verified this myself, the providers feel that had they had to get the client themselves, do all the underwriting that we do, and then process it and the client contact, all that stuff, that it would cost them internally 6%. So that's how we got 6%. Now the general guideline has become 8%. I don't know why, but it is. Some states, and I believe California is one, and I'm not clear because I still follow my own rules and I have always taken less than what is acceptable. Obviously, I'm not a money person, but now they're looking at 8% of the face value of the policy or 30% of the settlement itself, whichever is less. Some states disclose it in the contract. Others do not, and they don't have to say anything. I have landscapers outside. I'm going to close my door for the noise. Excuse me. Okay. I apologize for that.
No worries. So
Yes,
it sounds really, really similar to what we experience in our industry as well.
it is.
Yeah.
That's why this is such a beautiful, what's the word I'm looking for? It starts with a C. We can work so well together. Collaboration, thank you. Because I believe that seniors who are making big changes in their lives or that are facing money concerns, they need something extra and not just here's the money or here's how you get it. They need helping hands.
Yeah.
Some of them need coddling. Some of them just need a conversation every once in a while.
Coaching.
And that's something that's so important. I know I stay in touch with my clients every single week, even when there's nothing going on. How you doing? Don't want you to think I forgot about you. This is where we are in the process now. So
Carole, I'm sorry to interrupt you.
No, it's okay.
How many brokers are there like yourself in our area? How are there? I mean, so you're the only one I've ever met.
I'm the only one.
Right?
I'm the only one. There are many more providers that buy policies. The brokers that are out there, I mean, I wish we could do a Google search right now so I could go down the list with you. Most of them are either life insurance agents Or you'll find even financial planners who say, we do life settlements. Everybody seems to have jumped on this wagon and claimed to be able to do it. But I am one of the few specialists in the nation. And that's not because I'm so smart or it's nothing like that. Honest to goodness, I got into this because it showed up for me. I saw a need, I filled it, I had no plan. I've never had a business plan. Julie, you can get a sense of that by, how this showed up and how I don't have a PowerPoint. I follow my heart and I run by the seat of my pants. I got very lucky. I have a good business mind. I'm very compassionate. And I'm very fair. And I am not smart enough to keep my mouth shut when I see somebody doing something wrong. I get very crazy at them. And
Well, this is what we need to learn, because I want to know who else is out there talking to people about life settlements, and then by extension, viatical settlements that we need to know about, because one of the things for us as SRES is learning these things so that we can identify a precarious opportunity for us, ourselves, and our clients, right?
Precarious being the word. That's where research comes in. Your question is an excellent one. And I don't want to appear flippant when I say there is nobody else, but I know the reality. Honest to goodness, there isn't. As far as I know, I am the only viatical settlement expert left. And I say that, now the operative word here, expert. You got to know all the rules. You have to know what the difference is. You have to know what providers are going to pay the most. The reason why most people in the industry today don't know that is because they all got into it after 2000. And after 2000 is when insurance agents got into this. So, and I don't want this to be about bashing insurance agents, because it's not my goal. It's just unfortunate that they're the ones that create most of the problems. And again, I believe it's all commission driven. They see an opportunity, so they do it. If they were doing what's best for the client, same with real estate brokers, although you don't have the proper licensing for this. But still, it's one thing to tell somebody, did you know you can sell your policy?
Carole, do you know how many real estate people that our colleagues that are also insurance, they have their insurance license?
No, I didn't.
Oh yeah.
Oh, that's great.
I'm
Okay, that's
one.
very good.
Yeah.
I'm
Because
one.
simply by
Skip
having
is
that
one, and that's why it is a collaboration of a combination of skills and tasks that we do provide for our clients.
Yes.
You're just a different commodity.
Okay, that's great.
So yeah. So that's
'Cause I
okay,
would
but that's
still-
what I'm getting at. That's the dangerous part. This is where the smart people trying to watch out for our clients to keep an eye out for the ones that are not.
Right.
Yeah,
So,
if I may, this is Angel.
hi, Angel.
Carole, the word you use, coddling, quite frankly and sincerely, we really have to just do a good job of taking care of these folks.
Right.
They are in a very unique position. What I've learned so we do tax deferral of capital gains using a MetLife annuity that's good for primary property and so forth. Some of these seniors I've spoken to, I was initially shocked, but now it actually makes sense. When I ask, oh, you're looking to sell, who's your tax person? I get typically two responses. Angel, I'm 80. My tax advisor passed away 5 years ago. or they retired 5, 7, 10 years ago. I have no one. And I'm so surprised. I'm like, oh my gosh, you need help.
Yeah,
Like they're starting to pull the trigger on things they don't quite understand.
exactly.
And I think what we're trying to do, all of us, as a team, is say, let us help you make a more informed decision.
Exactly.
Because once
Exactly.
you pull the trigger on some of these things, a lot of times there's no going back.
It's true.
And the last thing I'll say, and the more I've learned about like the services you provide, and I just learned this last week, Carole, and I'm kind of surprised the little knowledge I know about these types of settlements where they sell their policies
Mhm.
is coming to people like you that get these insurance companies or these companies that buy them out to compete.
Mm,
Because somebody
that's
else
the
said,
name of the
yeah, I
game.
mean, you just call an 800 number, they're going to offer you X, but most of these folks don't know, don't kick them at their
Exactly.
first offer. I mean, you can actually have these companies compete. And I was like, whoa, you can. Again, I'm sticking in my own lane. I don't do any of that.
But you're totally right.
And then the last thing I'll say about that is because I've seen this need and I specialize in annuities, is gathering the information to find access to annuities that are geared towards seniors, this
Appropriate.
group of folks. And some of the issues that have come up is, hey, when you cash in these life settlements and you wind up with a lump sum, here's the other thing.
What do you do with it?
Seniors are intimidated by a lump sum of money over X amount. And when
I
I
could work
said to
around
one,
that,
yeah,
but
and when I said to
I
one, I
didn't
said, well, look,
realize that.
put it in your bank. And they're like, no, Angel, I could still lose money. I don't know who's working at the bank. Like they have so many concerns. And so now we're looking to help them, give them options to annuitize a portion of that lump so they
Yes.
have guaranteed income. And this is wonderful because the more I learn, Carole, the services you provide, it's like, wow, there's actually a menu of options we can bring to this unique community of folks and really at the end of the day, help them, just help them.
True. And you bring up some really interesting points, Angel. For example, and I can give you real life examples of my own clients if you'd like, but I could sell partial policies. I don't have to sell the whole thing. And there's a perfect
What
example
an
of what a
option.
life
What a
insurance
great
agent is
option.
not going to do. They'll take it and sell the whole thing. They may not know that there are people out there that will work with me and manipulate this thing so everybody wins. The people can keep some insurance, they can sell the rest. I mean, there are so many different options.
Yeah, wonderful, wonderful.
So you're right. And as far as how do you avoid the problems, Julie? The truth is it's not easy because the people that are perpetrating the problems are smart. This is what they do. They know all the lines. They know what to say to bring in a sucker. You know, what I suggest is research, research, research. You want to go to the California Department of Insurance, although they have a terrible site now. And once insurance agents became able to do this, they basically threw the rest of it out of the window. That's something that I'm going to start working on at some point. I want the department to get their act together and understand again that consumers are at the bottom of this and it's up to them to protect it. There is no longer a list of settlement brokers because there are too many insurance agents. So how do you find out, or back to who else does this but me? There are probably, I would think, a bunch of people around the Bay Area alone, but they don't specialize. That's the key. Anybody, even an individual, can take their own policy. They can call a number of different brokers, a number of different providers if they want to do this alone and they think they're saving a broker fee. Go do it on your own. I urge people to do that if that's the kind of person they are, like if they're stubborn like me. Go do it yourself and see what happens.
For sale by owner.
Bingo. Same thing, but they're putting themselves at great risk. Because even the providers have levels of what they'll pay out. I will always get more from any given provider than somebody else will. I typically get more than other brokers do. And that's for several reasons. My knowledge and my experience, of course, comes right up at the head of that. I'm also known in this industry and I'm liked in this industry. I have relationships with most of these companies. I'm aware of all of these companies. I know the good guys and the bad guys, so I know who to avoid. I mean, there's a company that has been coming after my business literally for 20-ish, maybe longer, 20 years. I have never sold them a policy and I never will because I know what they're about. But at the very beginning, I remember going into it, and they're a big company. I went into an industry meeting. We used to have conferences every year. And I went and I met this new man who owns this big old company. And I went over to him and I introduced myself and welcome to the industry. Tell me, what do you do? Now, remember, this was back in around 2002, maybe. He said, well, we're gonna have a marketing company. My response was, great, we need it because nobody understands what we're doing. How are you gonna do that? Well, we're gonna tell people about this. Okay. We're gonna look at their policies and then maybe buy them. I said, well, that's what a broker does. You need a license to do that. Oh, no, we're a marketing company. This went on for a good 5 minutes where I'd ask very pointed questions. He'd give me an answer, which was to his credit. He answered me, I guess, honestly. But each time I had to go back and say, but you need a license for that. And each time he said, no, because we're a marketing company. That company is still here. That company is still playing games. That company is the one that's known for lowballing people. They're, I think, the worst company, but they've got so much money that they're doing whatever they can to get the word out. People call them first. They say, hey, I'll give you $10,000 for it. And not knowing there's any option, these poor people jump at the chance. They were going to let the policy go anyway. $10,000 is a lot of money. I'm going to share something with you. I have permission to use their name. This goes back to the late 90s. This is one of my very first life settlements. Are you familiar with the company Marin Recycling? Anybody? This is like the recycling company of Marin County. It's a privately owned company owned by the Garbarino family. Lovely, lovely men. And there were like 3 or 4 Garbarinos. There was Joe Jr., Joe Sr., Joe Cousin, all of this. They were doing their annual review, financial review. Everybody was there, including the accountant and the in-house attorney. In the review, they decided they had too many life insurance policies. They had key man policies on all the directors. Now, this is a good demographic for you folks to keep in your head. When somebody retires, they often let these policies go. That's a potential settlement. And I would think that you all understand. I'm sorry, I can't see anybody nodding or not, except for you.
I'm nodding.
I know you're
nodding.
the only one that I see. Other than that, I see pictures. But key man policy is when there is a smaller company, and they take out $1 million plus policies on all the major executives. So if something happens to one of them, the policy pays off to the company, and then the company has the money to kind of readjust and hire a new person, whatever it is that they need. They get this influx from the key man policy to help them keep going. In this case, they decided to get rid of a policy. They had one policy that they chose, $3.8 million face. The premiums were $77,000 a year. The in-house attorney had been approached. One way you know that something is wrong. They were approached by one of these big companies. In fact, it was the company who tried to promote the insurance agents into this. And they told the attorney, if you ever have a policy you're letting go, come to me, I'll give you $10,000. So the attorney told the people at the conference table, well, I know a company that'll give us $10,000. So one of the Joes said, okay, here's the policy, literally threw it across the table as the story was told to me. Here's the policy, go get it. The attorney takes the policy, he goes down the hall to his office, and he ordered the contract. This company was not looking at the medical records. They were not doing the real settlement process. All they knew was $3 million policy, 3.8. This is going to be our liability, $77,000 a year. But if we only pay him $10,000, we're going to come ahead. They sent Marin Recycling a contract to buy the policy for $10,000. Back to the conference table is sitting Jack Nixon. Jack was their insurance agent or CPA. I think he was an insurance agent. Forgive me, I'm not 100% sure. Anyway, Jack had read about me in the Marin IJ, the local newspaper in the county newspaper in Marin. And he said to the guys, you know, I remember there's somebody local that does this. Do you mind if she looks at it? They say no. Jack brings it to me. I took the same information, that same exact policy. I got them over $257,000. That's the difference between doing this yourself or, God forbid, don't go to that company that's advertising on TV. That's the difference. Big, big money. So honest to goodness, this past year, maybe a year and a half, is when these companies started advertising on TV. One ad is a fabulous ad because it sinks in with people. They finally start to understand the concept a little bit, but they pick up the phone, they call, and they accept $10,000. That's why I've gotten so proactive again. I was ready. I was like semi-retired. I'm back full force now because I don't want people to be ripped off, and there aren't enough professionals like me to spread the word. So it's imperative that I teach as many people as I possibly can how this works, what it's about, and what to do. To avoid the bad people, go to the department. You can always check with the department or ask somebody directly. If you see somebody advertising for this, call them and ask them, do you have a license? What's your experience? Do you also do viatical settlements? Who do you represent? That's also important because the providers that buy the policies, the ones that are advertising on TV, they represent the investors. It's their job to pay as little as possible so they can have the biggest gains. My job is to get as much from them as I possibly can. So, and my client is the insured, who is your homeowner. So how do you know who to even look for, who this might help? Nobody talks about life insurance. It's not a dinner table conversation, which is one of the reasons nobody knows about this and why it's so hard to get across to people. I think it's a safe bet that if somebody owns a home, they probably own a life insurance policy. Whether it's called mortgage insurance or whatever, as long as it's based on somebody's life, that's life insurance. If they're selling their home, do they still want to keep the policy? That might be something that they think of after the fact, which is okay, because they're still paying premiums on something that maybe they can benefit from the money. But you guys are in the position to educate them right then and there. You have a life insurance policy that's covering this home. Maybe they're getting the money from the home because they can no longer manage living in it, right? So they're selling the home, they're getting X amount of money net after they pay their mortgage. Is that going to be enough to pay for long-term care? Is that going to be enough to live in a decent home care home? In most cases, it's not. Or they don't even feel comfortable doing something. They certainly don't want to take a loan. The cash that I can get them from their policy can supplement what they're earning from selling their house. It could pay for a home. It could be a down payment or better on a new home. Again, I don't care what they do with the money. I just want them to be happy and healthy. Julie?
So what's the average amount that a homeowner holds in a life insurance?
That would go to the value of the home. So somebody with a multi-million-dollar home is most likely going to have a multi-million-dollar policy. Somebody who rents is probably not going to have a policy. Somebody who's living in a small one-family home, I was going to say we're 300,000. I forgot we're in the Bay Area. You know, so I would venture a guess that they're over 500,000 minimum. The more money they can get, the bigger the policy. Well, the bigger the policy is, the more money they can get. However, to determine these payouts, it's really a factor of the policy's net death benefit, because there may be a loan. So if there's a loan, we'll pay off the loan and then buy the rest. But figure the face value of the policy, the premium expense, and most importantly, their life expectancy. So we have to take what the life expectancy is once we get it back from the actuarial companies. And while I'm there, I make sure that I get multiple different life expectancy reports. So then we always try to go for the lowest to get the most money. I also have an advocate in most companies who deals with me beating them up for money. So I have one in particular. Now she's saying, okay, I got you another $2,000 here or there. So that's a good thing. But we look at that, they'll take the life expectancy. Let's use the Garbarino, $77,000 a year. If he's got 10 years to live, now we're looking at they have to take off $770,000 off the top. They'll add in a buffer, subtract that from the main death benefit, come up with a number. He was a healthy guy. So even though he got $257,000, when you compare it to 3.8 million, it may not seem like that much, but he was going to let it go. That's the beauty of a life settlement. We deal with those 80% of policies that are just going to be let go. It's like a bonus.
So how do we get a mailing list for those people?
The people that have the policies, you're asking the right one. I'm great with marketing ideas, which I'm happy to talk to you about. I could write something up easily. Most of the information is in my head. It has been a challenge since we left the AIDS community. It's been a challenge getting this message across. It is the biggest challenge. The life insurance industry, those companies themselves, turned off a lot of agents at the beginning. So that was maybe a 10-year lag. Now there's so much misinformation. There's a lot of disinformation. I know we're hearing that way too much these days, but still, it's the reality. People do not understand the way this really works. Oftentimes people hear life insurance and I see their eyes roll into their heads. They don't want to talk about life insurance. I have not found that magic key, Julie. I wish to God I did. I know that when people speak to me, that works. I was the industry's media darling for a while, which I was very blessed to be there. Why? Because nobody else was the same thing. I was really the first broker in the country. I was the only one representing individuals that were selling their policies. Everybody else, and if you look at stories online, you could just Google it, most of them are going to be about fraud. And I was the one that spoke out. I really just wasn't smart enough to keep my mouth shut and do what I needed to do. I don't regret, but I could have had my life a little easier if I didn't threaten so many people.
Julie, you think we might open this to Q&A now? We're getting,
Yeah,
Yeah.
yeah,
I'm sorry,
great idea.
I didn't hear that. I'm sorry.
So does anybody have any questions?
I did. I apologize. I didn't get there at the beginning of the talk, but I was kind of confused in the type of policy. And I heard
Good
you
question.
mention that you could do your homeowner's insurance can
No,
so
no.
that
Just life insurance.
life insurance. But what was the statement you made? Even your home insurance is like a life insurance because they base it upon your age.
No, what I meant when I referenced that was that if somebody has what they call mortgage insurance,
Mortgage insurance.
in my experience, it's just a life insurance policy that's obtained to pay off the mortgage in the event the individual dies and can't do that. But typically it's a life insurance policy.
But it can be sold if you say sell the house.
You
You can
sell-
take that policy and use it to sell.
You can,
It-
a life insurance policy is personal property. So even if they got it because they want to make sure their mortgage is covered if they die,
Mhm.
once they sell the house and no longer have that obligation, that's still their property, the policy. So they can take it and use it on the new house. Remember, it's a thought in their head. This is why I have the policy.
Mhm.
Same thing with, well, let's keep a policy so that we can pay for the kids' education in case I die.
Mhm.
Same thing. It's not literally tied to that mortgage unless there is an additional contract doing that. And
Okay,
if
but
so, then you nullify that contract and the policy becomes yours again, and I take it and sell it.
okay, can you had mentioned long-term care? You could take it and convert it over to something of long-term care.
You could. This is where somebody like Skip, for example, or whoever sells annuities, long-term care, it's a way to get the financing to do something like that.
Mhm.
Because when they get the money, there are no strings attached. They could buy another home. They can take a trip around the world. They can invest it in an annuity
Mm.
or use it to get into a long-term care facility. Anything they want.
Okay, I have
No
a client.
strings. That's where the next financial professional comes in.
Okay.
Or the first one, because a savvy financial professional will know about life settlements and know enough to know that they shouldn't be doing it on their own. That's where I'll get my referrals from. Then oftentimes I end up saying, you know what, this one's just not going to work.
Mm.
It
Yeah, when
all
I got my
depends. Sorry.
when I got my CFP, the Viatical Settlements were part of the insurance chapter, so they do teach it to financial planners. They shouldn't.
Well,
should
that's good to know. Now you said viatical settlements. Is that what you were taught, or life settlements, or the difference?
They only did Viatical Settlements, but you know,
That's
it's kind of an introduction into the broader field.
Yeah. The difference between a viatical settlement and a life settlement is the life expectancy.
Yes.
So after 96, maybe it was 98-ish. By life expectancy, terminal illness was defined as having 24 months or less to live. Okay.
Well, I got my CFP back in 91, so the new course may address that now. I don't know, but the point I'm trying to make is that financial planners are schooled in this area and they should know about it when they counsel their clients.
They should know about it, but they don't necessarily need to know what the whole process is, the inner workings of the actual life settlement marketplace.
They
Exactly.
just need to know that there's a Carole out there they can call to say,
Yes.
now educate me on this specific product, right? Yeah.
Well, that would be ideal.
Yeah.
That
But
would be ideal.
we still want them to tell people that it's an option, even if the people go research on their own. You know, they need to know. Nobody knows that they can sell a policy.
You know,
No.
Carole, what stands out about this whole thing, what I've learned in the last couple of years is it's one thing to sell a person's property. So again, if we're dealing with seniors, I think all of us have somewhat of a duty to ask a little more and what are your plans?
Exactly.
I mean, yeah, you bought it for 200,000, you're going to sell it for 2 million, but maybe you could, let's have a conversation of what you're trying to accomplish with this sale. Well,
That's what
because
I do. I feel that that's my obligation to determine why they're doing it, and most important to make sure they're making the best decision. Selling a policy isn't necessarily the only option, and it's not necessarily the best option.
Yeah, when I make presentations to realtors, is to remind them that, look, you may have a lot of seniors on the fence sitting on a ton of equity that want to downsize or do whatever. And what they're telling me is the reason they're on the fence is they don't have a plan. So they're intimidated to pull the trigger. Yes, you're going to sell for a lot of money. I don't know what to do with the money the day after. I need to talk to people. So we're trying to, pull people together like the Caroles of the world to say, let's look at some of the options.
Yeah, that's
that
what we
in
do.
and of itself may actually get some people to move forward with a sale because now they have a plan.
That's
Okay.
why
I
agents
think-
need to take the SRES course to be able to cover that.
Yep.
The other thing that we're looking at, and I'm really sorry, but it's 12:42. Okay, I thought it was 1:42. Oh my gosh. Okay, no, we're good. It's important to let them know, but one thing to consider now that we're all going to be seeing a lot more of is the funds that are backing Medicare and Social Security. What is being said, and I have much more to learn, but they're saying that these funds are going to run out in 15 years. A lot of these older people may not be concerned with what's going to happen in 15 years, but what if they are concerned? I think it's really important to have control of my own money.
And we are going to have a speaker talk about Medicare probably after the first of the year. So we'll get into more detail on Medicare and all the updates.
Good.
I have a question. Oh, go ahead.
I was just going to say this for those people that feel that they may want more control of their own destiny, which is what I'm afraid of these days, is that I don't know what's going to happen here in 2 months. I think we're living in crazy, crazy times. And I find that I don't even trust banks anymore. I mean, I'm not saying take the money and put it under your pillow, but I am saying I think it's imperative that we're all much more aware of where our own money is. And you financial advisors that are here, this is on you, not on me, but to educate people. If you've had your money at Wells Fargo for decades, when's the last time you really checked out Wells Fargo's solvency? Or their management has it changed recently? I mean, this goes to everything. Where is your money? Do you want some of it yourself? I would say, you know, and I always tell people at the end of the day, when I'm getting them their money, I say, okay, I want you to promise me one thing. You're going to take a little bit of this and go do something fun and frivolous for yourself.
Amen.
Forget what you need, forget,
Party.
right? I mean, just something. I had a delightful client, young man. His name was Joey, and he was something like 24 and he had AIDS. He was so sick. He had like maybe 6 months to live, and I didn't want to sell his policy because I figured, what are you going to do with this? You know, why take the hit? He had family and this and that. And he convinced me that he had plans. I sold the policy, and Joey paid off his parents' mortgage,
Mm.
paid for his sister's wedding. I'm gonna start crying. Paid for his sister's wedding, and then he got himself some kick-ass entertainment unit, like on the wall across from his bed.
Mm.
You know, you
Good
hear
for
a story
him.
like that,
Good
and you
for
want to
him.
help him do it.
Mm-hmm.
So that's the way, you know. There's another great story. It was written up in the Chicago Tribune. A woman had called me, very tough New Yorker, and her dad was sick, and she wanted to sell her policy. And she wanted me to represent her, but she was planning on getting 3 different brokers. I don't work that way. I'm not going to do it. You know, you have one broker to do this. And she was adamant she was not going to do that. I thanked her. I wished her well. She called me back several times. She finally decided to go exclusive after talking with others. What I did for them was it took the $500,000 policy. Arlene's goals were to take care of her 2 younger kids and to spend more time with the dad. So what I did was split up the policy. I sold $300,000 of it and got them cash for that, which she used to bring the 2 younger kids who were in Sacramento, herself in New York. She brought the whole family together in Colorado, where brother Steve was, and dad. She brought dad over there too. They all spent that final year of his life together. She says, it sounds strange, but it was possibly the best year of our lives. We also got to create 2 new $100,000 policies, one for each of the little kids. That's a beautiful, that was a viatical settlement, not a life settlement, because dad was terminal. But by using that policy, and you can only do this with larger policies. I don't even think I could do that now with a $500,000 policy. But I can, if you got somebody selling a house, for example, they have $1 million policy. They're taking out a $500,000 mortgage on the new house. Well, maybe I could sell half of it for them. We'll keep $500,000 in a policy to cover the new mortgage. And let's get you cash, furniture, home care, whatever you need with the other 5,000. I also need to mention that viatical settlements are tax-free.
That was another question I was gonna have. So proceeds are tax-free, okay? That's good.
Viatical
From
settlements.
viaticals. What
only.
about life
The
settlement?
life settlement, I believe it's a capital gains tax. Again, a financial person would have to address this, but the way it's based is the cost basis minus the settlement.
Gotcha.
So whatever
And-
that difference is up for review for tax reasons.
Right. And so does whole life, universal life?
You're great. I love you, Julie. You're asking the best questions. Yes,
Term.
I can work with almost any type of policy.
How about accidental?
No,
Okay.
except accidental. Term policies I can do If the circumstances are right, I need to see them. But if they're convertible, they have to be convertible. Whole life, universal life. Survivorship is difficult. As an example, I just had a couple I was working with. They came to me with 3 policies, one on the wife, one on the husband, one on both of them. Each of those 3 policies had a substantial cash value. What happened was I had to underwrite both parties. The husband, who was older and not in great health, got a decent settlement. The wife, who was younger and healthier, got a tad over cash value. They were going to let their policies go. They were going to take out their cash value and let them go. So the husband got a decent settlement. The wife got just over cash value. The cash value was like $185,000. So I think I got her something like $200,000. I'd have to look it up. It wasn't much, but it was something rather than just taking the 185. But that's a survivorship policy I couldn't sell because the providers are going to look at the combined life expectancies and then probabilities, and it was just too risky for them to take another one.
Now, is there a minimum?
$100,000.
Okay, that's good.
My minimum is $100,000 because I don't have any buyers below that. But many of the providers have higher minimums. Okay, I try never to turn anybody away. It goes back to what can be made at the end of the day, not by them. The industry looks at what they can make. So with a $100,000 policy, if a company is paying the individual and then their own expenses, it becomes not worth it to them. Whereas at the beginning, when we were doing viaticals only, I think I sold like a $20,000 policy one. We didn't care because we were all into it for compassionate reasons. We just wanted to get these guys money. But, you know, and then once it starts happening, and well, it's the insurance agents that really screwed everything up. I don't know what else.
I wanted to follow up on the question that I asked about the forget now what it was. It was on the type of policy. You don't do term unless it's convertible. And the
Okay,
client
there's
that
one caveat to that. And that is if somebody's life expectancy is shorter than the term itself, I would definitely look at it. Right? Because whoever buys the policy needs to make sure it's going to stay in force.
So you said if their age is less than the term of the policy,
It's their life
their
expectancy.
life
So
expectancy.
if somebody comes to me, let's say it's got to be a younger person if it's a viable term policy. Let's say somebody's 45 and they have 15 years left or 10 years left on their term policy before they can convert it or before they need to convert it to keep it. And maybe he's got pancreatic cancer and the life expectancy is deemed to be 4 to 6 years. If that policy looks like it's going to stand up for another 15, I could probably sell it. That's what I mean. If the life expectancy is shorter than the term, there might be a way to liquidate that for them.
Okay. I was thinking about the client that I have, and I'm going to ask her, we're selling the house to see if she has a life insurance policy.
That's the first question.
Yeah. And her age is such that I don't know if she can get a partial policy. You mentioned that she at a 0 policy or no policy or 100%, you can get something. If at her age, I think she's 84, if she could get something, and if
Probably.
when she passes, her children will get whatever is left over. There is a thing that Lincoln is doing, and I was going to attend their seminar. So whatever they put in, and if they don't use it, that it will be aired to their children.
Right, exactly. So that's one option. Another option is what I just explained with my friend Arlene. She and I have become best friends, by the way. She's the one with the dad and the kids in Colorado. In her case, because the policy was 500,000, I had a lot of room, wiggle room, I call it, to do more than one thing with it. Same thing with your person. If the policy is big enough, I could sell part of it, they can keep part of it.
Mm,
I literally, what happens oftentimes, and it depends on who buys it, what we do is, I don't remember the proper term. It's kind of like write up a whole new policy for the balance, but without that raise in premium expense. You know, life insurance is structured so that it gets more expensive the longer you have it, which is why so many people let it go.
hmm
Same thing with when term policies are converted. Those premiums skyrocket because the truth is the insurance companies don't want to pay off the death benefit.
hmm
That's the bottom line,
Wow.
which is why life settlements exist. That's exactly why we're here, because the majority, crazy high majority of people let their policies go. They get too expensive.
Wow.
Even if I can get them something, it's better than just giving it up. The insurance industry does not like me. Well, hopefully they don't know about me personally, but they certainly don't like the work I'm doing because I'm screwing up their tables. It used to be 9 out of 10 laps when we started this. Now it's 8 out of 10, 8.5, 8.3, something like that. It's not still they're winning big time. I mean, there's no reason for them to behave the way they do, making it more difficult. By the way, I also deal with FEGLI policies. I hate them. Most of my providers hate them. But again, I don't say no to anybody. FEGLI is Federal Employee Group Life Insurance. So every single federal employer, every single federal employee gets basic life insurance, comes along with their job. Usually it's equal to 1 year annual pay. They also have the opportunity to purchase optional insurance at a group rate. That optional insurance can go up to 5 times the salary. Typically, when they retire, they let that optional insurance go. Duh. Come to me, talk to me. My federal judge, in fact, that's what she's got.
Where do we get this mailing list? Mailing list?
I don't have a mailing list
We need to get one. We need
to
to get,
advise people. I would love to work with you on that, Julie. I really, really would. I want more people to know about it. And you tell me what you want to mail and I will write it up without doing the book that I started for today. If anything, it's most difficult for me to keep it succinct, which you're probably getting an idea of here. I have so much information and it is so complex. I just want to see if I've missed anything major, but please keep your questions coming.
Well, we
so,
are
yeah, we're
running-
gonna,
Oh.
it's 12:58. So if anybody's got any last questions, and then we're gonna have you back again for sure, Carol.
Thank you. I
For
appreciate
sure.
that.
Yeah.
There are life insurance policies that are sitting in trusts or estate plans. Be aware of them. Anytime somebody needs money, do you have a life insurance policy? Okay. Remember, it goes to life expectancy. So either they have a terminal illness or a life settlement is basically by definition for people over 65 without a terminal illness. In reality, they want somebody that has a life expectancy of 18 to 20 years or less. So the sweet spot for this to sell the policy and get a good chunk of money is hovering around 8 years, 6 to 10, something like that. That's when I can do most magic.
Okay, well, we all can take an inventory of our clients and families and everybody, and we're gonna start with that. We're gonna say thank you so much, Carole Sue Fiedler, for this
Thank
this
you. It was
introduction and
really my pleasure.
information, and us as SRES, we're gonna add this to our tool belt, and we're gonna keep it top of mind.
I'm always available for questions. Don't hesitate to ask me. I will happily give free policy analysis. No problem. Don't hesitate to call me. Just ask. My website, the easy address is settlements101.com.
And I'll have all of your information and access to you in the bulletin, and probably next week, and I'll devote a whole page to it.
Wow.
This is just gonna be the beginning. This is.
May I write that with you, please?
Yes.
Well, thank you so much. I appreciate everything, Julie and Skip and everybody else that's been here. I have no idea how many there are. I thank you so much for your interest, and I look forward to talking to y'all.
Julie, is this recorded and you're gonna send it out to us? Thank you.
Yeah, definitely. Yeah.
Thank you.
And
Thank
I
you.
want to say hi to Mark. Mark came in from Florida. Huh?
Hi,
And
Mark.
Carmen from Southern California. Rick is from Sacramento. Sherry's from Michigan.
Wow.
And Hal's from SoCal, Monticello. And we're just so excited. So excited. Okay.
Thank you.
I'm
Thank
going to
you
let
all.
everybody go. We're going to have a great week.
Okay, Sherry, be aware that your laws are different than what I've been talking about. Okay,
Yes,
thank
definitely.
you. Okay.
Thanks, you
Bye,
guys.
everybody. Make it a great day.
Have a great week. Thank
Thank
you.
you. Thank you.
Bye-bye. Thank